Good morning, everybody. Hopefully you had a wonderful summer weekend. Got some different topics that I think you'll find of interest today. So we'll get started here. Last week's 5Q tape breakdown. Does he get the client to say what he needs at the end of the beneficiary script? So what does a client need to say at the end of the beneficiary script? What does a client need to say at the end of the beneficiary script? I know that's a lot of typing, so I'll give you a minute to type that in there. What does the client have to say at the end of the beneficiary script for you to know that you did it right? Either everybody's fingers are tired, you don't know, or here we go. We got a couple answers here. Only cares about money. Only wants to make money on me after I'm dead. So yeah, so that's what we want to see. Why didn't my guy do that? Yes. So those are so we want at the end of the beneficiaries, we want to say, all my guy cares about is making money. He could care less about me and my family. If they say that, who do we have on our side? We have the spouse who does not take care of the money, but instead takes care of the family on our side at that point. And once they get them on the side, it's all over. I want to thank Ray. He sent us to help everybody on the system. So thanks, Ray. He will receive this email that apparently came from FINRA, saying the following request has been provided to your firm. Kindly follow the information in the letter and complete the request by yourself. Late submission may attract penalties. Please respond to this email, and then principal examiner, FINRA. So knee-jerk reaction is to panic with this, right? But Ray and Ray's office is very professional. They didn't panic. They sent to Oklahoma Securities office and said, hey, is this real? And then they said, no, it's a phishing scam. So guys, make sure in today's world, with all the scams going on and the ransomware going on and all that kind of stuff, don't just assume that it's going to be that when you receive an email. And there's lots of ways you can double check on that. But guys, does the IRS, does any important government agency that you could get in trouble with, are they ever going to email you? No, it's always going to be what? Yeah, John said he got the same thing. No, they're always going to, it's U.S. mail. So that's right, Tom. The only thing so don't ever respond to anything via especially governmental or regulatory agencies via email. If they want you, they're going to send you a U.S. postage mail. Make sense? So thanks, Ray, for doing that. I thought this was kind of funny. I love the Irrelevant Investor, Michael Batnick. He has a great blog, but he's talking about 10 questions people only ask in a bull market. So first one is, why shouldn't I hold all my money in stocks? So I think I've told you about the one and only doctor that I ever had as a client. He came to me in 1999 and told me, Mike, your retirement calculations are way off. I should be able to retire in about 3 years. So what had he done? What had he done? He looked at the 25, we had 4 years of returns where we're in the 20s and the 30s in rates of return, 20s and 30s in the rates of return. And so what did he do? He just extrapolated. Well, if we've had 4 years of 20 and 30 percent rates of return, obviously the next 4 years we're going to have 20 and 30% rates of return. Is that the way the market works, guys? Yeah, recency bias, Steve. Very good, Steve. Recency bias. So is that the way the market, if the market's gone up 20, 30, 20, 30, or 25, 32, and 27, and 34, what's going to happen? So the next question, do I really need 6 months in cash? Should I only invest in growth stocks? Guys, tell me you have not heard these things. Why wouldn't I just dollar cost average into a 3 times long S&P 500 ETF? So basically an ETF that's taking long options on the S&P 500 if I've got enough time horizon. Should I trade options? Why should I even bother holding bonds? They're not paying anything. Might as well put all my money in stocks, which goes on here. Why not just put all my money in dividend-paying stocks as a bond substitute? How do I get higher yield on my savings? What are the best stocks to buy right now? Is value investing dead? So I think Steve hit it on the head. All of this has to do with what bias? Recency bias. Obviously, because the market's doing well now, the market's going to do well in the future. In fact, it's the complete opposite, right? The better the market's doing now, the more likely it's going to do what in the future? Because somebody said it here earlier, it's a return to mean, right, Tom? Return to mean. So why do people have advisors? So we can answer these questions in a manner that they realize, oh, I'm getting ahead of myself, or I'm not thinking clearly. I'm getting emotional. Are these intellectual questions? Or are these emotional questions, guys? So everybody answer this. Are these intellectual, or are they rational, or are they emotional questions? They're all emotional. Yep, they're all emotional. So Mark Hulbert is one of my favorite analysts when it comes to the market. And he had an opinion here just very recently this month. The S.P.I.C.E 500 would be below 1,600 without these three pillars, and the supports are now weakening. So without these three pillars, the market would be at 1,600. The S.P.I.C.E would be at 1,600, and those three pillars are now weakening. So here's what he says. Stock prices can't indefinitely grow faster than the economy. This provides a crucial reality check for U.S. stock market bulls, many of whom believe stocks can continue outperforming the U.S. economy in perpetuity. Over the past decade, for example, the S.P.I.C.E 500 on an inflation-adjusted basis has outperformed real GDP by a margin of 11.9% to 2%. Guys, if the market kept performing at 12% versus the GDP at 2%, what would the PEs eventually be? If the market kept performing like this, I mean, is this close, or just we're talking about how many times? 5 times, 6 times faster. The market's going up 6 times faster than the GDP. Can that continue to happen, guys? Yeah, Mark, exactly. That's right, Tom. No, it can't continue to happen. Such slippage has dire implications for U.S. stock market's future return, but I want to first discuss why the stock market's stunning performance over the past decade was not due to economic growth, And for a healthy stock market, what should the market be reflecting? For a healthy stock market, what should the market reflect? The economy. And he's saying was not due to economic growth. Instead, the bulk of that performance was due to 3 factors. 1, valuation changes. The S.P.I.C.E 500 price earnings ratio has doubled over the past decade. Has doubled. And we've talked about it. Does anybody know this? What's the current S.P.I.C.E 500 PE? What's the current S.P.I.C.E 500 PE? Let's take a look. $45 change. That's crazy. Increasing profit margins. The S.P.I.C.E 500 operating margin over the past 4 quarters has averaged nearly 2 percentage points higher than it is a decade ago, according to Howard Silverblad, senior index analyst at S.P.I.C.E. That's a good thing. Profit margins are going up. But can profit margins continue to go up as quick as they are right now? We're going to talk about that. And then here's the big one. We've talked about this many times before, net buybacks. What did corporations when they got the big tax cut here in 2018, what did corporations do with that tax cut? Hire more people, invest in more machinery, open more factories. What did 100%, not most, what did 100% of those companies do? Big buybacks. This has reduced the number of shares outstanding, increasing per share. And guys, like it or not, what's going to happen to corporate tax rates sooner rather than later? To appreciate the impact of these 3 factors, consider the S.P.I.C.E 500 now would trade below 1,600. It would trade below 1,600 if there had been no change in these 3 things. If there had been no change, and what is it currently trading at, guys? What's it currently trading at? At 4,200. That means it would be if it went back to normal. what kind of return, or what kind of crash would we see? Little or big? If it just went back to normal, not bad. I'm not saying if things got bad. I'm saying if it went back to normal. So a reversion to mean, what would happen? More likely, these three tailwinds will become headwinds. PE ratios are already at near-time highs of their historical distribution, and not even 100-year historical distribution, just the last 20 years historical distribution. So we're not even talking about 100, the last 100 years. We're talking about, even if we're looking at the last 20 years, they're double what they should be at. Profit margins are also at or near record levels, as I argued earlier this week. There are good reasons to expect these margins to decline in coming years. While it's possible that buybacks will outpace their share issuance in coming years, it's hardly a sure bet. Over the last 12 months, for example, there have been a negative net buybacks. That is, more shares have been issued than repurchased. In fact, Arnott pointed out in an email, for the most of U.S. stock market history, net buybacks has been negative. So, guys, just as usual, we're saying what? The good times are here forever, or be cautious? Cautious, cautious, cautious. Well, I saw this and I thought it was very interesting. The most popular options in people's 401ks were drawdown solutions calculators. So look at this. In 2017, 18, 19, 2019, the most popular service that 401ks had were drawdown calculators in 2019. This is the nearest data I could find. Managed account income drawdown modeling service. Access to benefit plan. How many pensions are left out there, guys? Shrinking, shrinking, shrinking. So look at how many people want to know what is the proper way to draw down my money? What is the proper way to turn my investments into income? Is that a good thing or a bad thing for us? That's a good thing. What do we have here? Remember, our second goal, without changing any of your current investments, but instead using what you already have, there are different ways you can actually create income. One way is to increase your income, and we have 3 ways to increase income by 25% or more, while at the same time lessening the chance of running out of money. So why, when you use the goals at the first meeting, are people showing up for those second meetings? This is what they want. This is absolutely what they want. So how good should you be at the sale? How much did you know about the ECM method? How fluent should you be, at least in discussing some of these other things? How fluent should you be in at least understanding, even if you don't do the tax client seminar, how fluent should you be in that concept? Even if you don't do the income seminar, how fluid should you be in the concept and the keywords and tricky phrases? Very. So even if you're not going to do those 2 seminars, you should know those 2 seminars, not word for word. You should understand. You should go through them so you understand the kind of things that you can discuss with clients, the way you discuss them, the keywords, tricky phrases, because that's what people want. How do I turn that income, or I'm sorry, those assets into income? Make sense? So a little psychology today. So we got lots of, Thinking Fast, Slow, Dan Kahneman, the one who started the whole behavioral economics train of thought. Dan O'Reilly is one of the people who've taken Kahneman's information and put it into or put it into simple ways that you can understand. So we got all these different psychology, positive psychology, industrial psychology, or psychology of what gets people to do what we would like them to do out there. The one I want to talk about today is split-second persuasion. So how can you quickly help somebody understand what they would like to do, what's going to be in their best brain fart, in their best, somebody help me. Turning 60 in 2 months. So obviously, that's a hard word, John. Thanks. Best interest. There's self-interest. In fact, it's one of these things right there. Thanks, John. You beat me to the next slide. So there's an acronym there, S.P.I.C.E. This is something that I would write down on a piece of paper and have it in front of your desk so you can constantly look at this. First thing is simplicity. Next thing is Perceived self-interest for the client. Incongruity. This is an important one. We'll talk about that in a second. Confidence and empathy. So let's break these down. So you should write these things down, or if you go online and type in Persuasion, S.P.I.C.E, you can find lots of information on this. But I think it's a wonderful way to break it down into simple terms. So simplicity is keep the message short, sharp, and simple. And if we do that, we're most likely to believe it's true. So when you think about the 21-point checklist scripts, and especially the stories, because people buy emotionally, they buy stories. Do I make my stories really complicated, or are they very simple? Yeah, they're simple. Do we want a lot of fluff in the stories, or do we want to get to the point? The same way the Bible uses parables, it's simple. It doesn't go into a lot of detail. It simply says, here's the facts. How would that you react to those facts? How would you act or react to those facts? Does that make sense? So keep things simple. Should we use fancy schmancy words, or should we use simple words? In fact, even in the script, when we talk about use fancy words, what do we say? We say, hey, that's just a fancy word for diversification, right? Simple words, 8th grade level, right, John? So keep things simple. Next thing, perceived self-interest. Con men, again, we're not con men, but we can learn a lot from what they do. Con men agree it's the key to getting us to do something we didn't think we wanted to do. What's in it for me? So, if you think about it, we don't really use this with 5Q. I guess you could argue that maybe in a big picture we use it, but are we saying, hey, if we start using this key to self-interest, we start saying, hey, you could save more taxes. Does that work? Oh, very good, Nick. Nick corrected me. We use self-perceived interest in our referral script. Absolutely, Nick. That is where we use it big time, because the reason people refer is not to help you, the advisor, not to help their friend, neighbor, relative, is to help themselves. Thank you, Nick, for correcting that. Now, in the 21-point checklist, though, how many people will leave their current advisor because you can show them a way to save taxes? Everybody answer this. None. Okay. How many people will leave their current advisor because you can save them in fees? None. How many will leave their current advisor because you show them a better investment? None. So we don't, except for, as Nick points out, we use this very big time in the referral script. But what do we use for the 21-point checklist? What's the one thing? It is a self-interest, it's perceived self-interest, but it's not the way a typical advisor would use self-interest. Instead, we're using what? Anger and a feeling of distrust. We get them, that's right, anger against their advisor. So it's not really self-perceived. I guess you could argue it is self-perceived. It's like, you know what, that guy's taking advantage of me. I have to take care of myself. I would say that, but it's not in the typical way an advisor would use self-interest, which is, boy, I want to save taxes. Boy, I want to lower fees. Boy, I want a better investment. That does not work, because they'll just take that back to the current advisor. The perceived self-interest we use is that your guy is omitting or hiding things, and the reason they're doing it is so they can put more money in their pocket. Now, if me as a client, if an advisor puts more money into his pocket and into my own pocket, I'm not really happy, but I can live with it. But if an advisor puts more money into his pocket, and by doing so, takes money out of my pocket, now I'm what, guys? See, if I have to pay an advisor fees, but I do okay, I can live with that. But if I pay an advisor unknown fees, unknown expenses that I did not know about, and by doing so, it takes money out of my pocket, that makes me angry, right, Steve? Angry. So that's self-interest, or perceived self-interest. Incongruity. This is a fantastic thing to use. Surprise people. Tell them a cupcake is worth 400 cents rather than $4. They're far more likely to buy it. So we use surprise in a number of different things. For one is the devil's advocate. Often I will actually argue against them doing something so they can argue for it. That surprises them. But there's a huge thing that we use incongruity for. There's a huge way we surprise people. I used to tell people I make $1 million a year by doing what? How did I go from making 50 grand a year for 8 years to $1 million in just 3 years? Using the same marketing to the exact same people. Didn't change marketing at all. Didn't change my mailing list at all. Went from 50 grand to $1 million in 3 years. Why? Dale's got it. Anybody else? Why? When they come to my first meeting with me, what do they think I'm going to talk about? Money. That's right, money. See, when you go on a date with a girl and the only thing you talk about is sex, they know all you want to do is sex. If on a meeting, if all you talk about is their money, they know all you want is their money. So what do we spend at least the first 45 minutes talking about? 45 minutes to an hour talking about? Non-financials. Does that surprise people? Yeah, they're thinking, what? Oh, I thought they kind of go, what? Why are we talking about this stuff? You don't even get paid for doing this stuff. I mean, I thought you were going to talk about our money. I thought you were going to try to get your hands in our pockets right away. See, the reason we do that is to surprise people. We sound like a funeral professional, then we sound like a attorney, then we sound like a doctor, then we sound like a security professional, then we sound like a property cat. See, we sound like everything but a financial advisor, and that surprises people. Also, where do we surprise people? When we finally get to a point where we sell hard. When's the first time in the 21-point checklist that we sell super hard? We sell a concept super hard in the 21-point checklist. Where do we do that? See how many of you have your thinking cap. Oh, Nick's got it. See how many of you have your thinking caps on. Where do we sell? What do we sell really hard? And Nick got it at the 21-point checklist. We sell the umbrella really hard, the umbrella policy. And they're thinking, okay, here it goes. So we've spent the last 40 minutes. He's pretending like he's on my side, but here we go. Now he's trying to sell me an umbrella. And then what do we say? Who's your car insurance with? Go back to that guy. Those of you that have done that, does that surprise people that use that? Does that surprise people? Yes. Because they think, wow, I thought he was trying to sell me that, and now he's sending me back to my current guy. He must really what? See, surprising people gets them out of this rut of always thinking, because guys, what do people think about us? What do people think about us as advisors? That we're there to help, or we're there to make money on them? Yeah, we're there to sell. I'm sorry. I know. I'm sorry, but that's what they think. So by surprising them and having them think, here it comes the big sell, and then we point them back to the property casualty, it's kind of the last straw where they take a breath and say, you know what? Maybe this guy is for real. I need to just settle down and give him a chance because this guy really does appear. I misjudged him. I thought he was going to try to sell me the umbrella policy. He sent me back to my current professional. Maybe I should sit down and listen to him and quit being so judgy. That's really an important part of the meeting, so make sure you're using that. Confidence. The more confident you are, the more we believe you're right. Why do I write upside down, guys? When I'm with a client, why do I write upside down? That tells them I'm how confident, how many times have I, in what I do, how many times have I done this with people? How professional am I? That dictates confidence. How good should you be at the script? If you're good at the script, do you panic when they go off the script? No. Also, here's a great thing with confidence. When the meeting starts to get a little bit tense, a little bit because we've made some mistakes. We all make mistakes. So we've made some mistakes. The meeting starts to get tense, a little bit adversarial. What do we do when that happens, guys? We do two things. What do we do? Ah, Tom's got it. Nick's got it. What should we do, guys? We speak more slowly. We lower our volume. Who speaks slowly and who talks quietly? Somebody who's out of sorts or somebody who's confident? Somebody who's confident. Then what tool also should we use at that point? Empowering. We want to empower. That has nothing to do with confidence. Slowing down and talking quieter, that's confidence. You take the meeting back to your speed, your cadence, you're in charge. But out of the confidence, we also want to empower when the meeting is going south on us. Make sense? So that's the C of SPICE. The E of SPICE is empathy. Look people in the eye. Nod when they nod. Tell them you're from the same school of thought. We trust people just like us. Is this what we use now again, if you do the script, if you're very good at the script, you have very few objections. But if you get an objection, what do? The first thing we do is we tell them we're just like them. If they tell us that they're never, they hate annuities, what do we say? If they say they hate annuities, what do we say? Same. We agree. I hate annuities too. I mean, you don't have to deal with them every day. I have to deal with them every day. Think about it. How often do you deal with them? I guess every time you run into somebody you think is going to try to sell you one. Guess what I have to do? Every single day I deal with these companies. So if you think you hate them, I hate them way worse. See, at that point, first of all, is that incongruent? Did that surprise them when I said that? Yes. And then they start to think, this guy is just like us. He thinks just like us. In fact, he's saying things that I was thinking. It's like he could read my mind. So what happens then is what? What happens to the resistance? What happens to the adversary relationship? It goes away. We move to the same side of the table then. Then once we're on the same side, then can we have a more rational discussion? After they know I'm on their side, can we have a more rational discussion about annuities and how, in that particular case, how annuities work? So if somebody at the third meeting says, you hate annuities, what do you say? I hate annuities too. Then you go through the FIA presentation, and at the end, when they say they want it, what do you tell them? And Jeff, how many tapes do we have of that happening where a client said they hate the annuity, the advisor says, I hate annuities too, then they did the FIA presentation, and at the end of the FIA presentation, the client says, I want that, then I want to put my money there, and then what does the advisor say at this point?
Oh, you can't have that. That's an annuity.
Oh, that's not how I thought they worked. So how do we have one tape of that, or do we have dozens and dozens of tapes of that happening?
Lots of tapes of that happening.
Yeah. So guys, if he instead said, yeah, but so if you said you hate annuities, so go ahead and say I hate annuities, Jeff.
Well, I hate annuities.
No, I understand why you would feel that way. I mean, many of my clients felt the same way. Guys, as soon as you do that, what's the client thinking? No, I understand why you would feel that way, Jeff. Many of my clients felt that way before. What they found, if I do that crap, what's the client think?
Oh, you're just
what do you think?
Tell me why I'm wrong. Jeff. You're going to try and convince me that I'm.
Yeah, that's not. I don't. He's thinking you don't understand how I feel. That's your setup to convince me that I'm wrong. And how many people want to be wrong? None. So the first thing I do is instead of turning into an adversarial relationship, I'm gonna tell them why they're right. For 2 or 3 minutes, I'm gonna go on and on and on about whatever he said, why they're right. So he knows that I am on his side, that I think the way that he thinks, that I don't have an agenda. Does that make sense? So they gave an example in the book I thought was awesome that encompassed all of these things: the simplicity, perceived self-interest, incongruity, confidence, and empathy. So, summer of 1941, World War II Flight Sergeant Ward wins the Victoria Cross for action over Zuiderzee at 13,000 feet, his starboard engine was on fire. He climbs out onto the wing, only secured by a rope tied to his waist to extinguish the fire. Churchill summons the shy, swashbuckling New Zealander to 10 Downing Street to receive his medal. The meeting got off to a shaky start. The fearless airman was tongue-tied. He was unable to answer even the simplest questions due to his nervousness. So Churchill said, "You must feel very humble and awkward in my presence." Oh, did I not? Ah, shoot. Okay. "You must feel very awkward in my presence," he began. "Yes, sir," Ward stammered, "I do." "Well, then you can imagine how humble and awkward I feel in yours." So did he use all the spice? Is that simple? "You must feel very humble and awkward in my presence." "Yes, sir, I do." "Then you can imagine how humble and awkward I feel in yours." Is that simple? Is it did it surprise the airman? Yes. Did Churchill stumble there, or did he know exactly what to do? Confident. Did he show empathy? See, he encompassed all of those things. Now, I don't know how he did perceive 4 out of the 5, because I don't know how he did perceive self-interest there, but he did 4 out of the 5 with that simple 2 sentences. So please write these things, write SPICE down. Keep things simple. Make sure when you speak, it's always, well, here's perceived self-interest. Guys, when you use one of my seminar presentations, how much time do we talk about how many qualifications we have, how long we've been in the business, and how smart we are? How much time do we spend doing that? None. What does every other presentation out there except for 5 Qs have you do? That. Guys, do they really care about you and how many blah, yeah, that's right, blah, 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 blah. Do they really care about you and how many, if you want to show you're smart, if you want to prove you're smart, is that going to be done via initials behind your name, or is that going to be done via content and the way you communicate? Via the way you communicate. Keep things simple. Make sure they understand what's in it for them. Surprise them on a regular basis. Be so good at your job they cannot shake your confidence. And show empathy. Look them in the eye. It's amazing when we videotaped our guys. We did this about 10 years ago. We videotaped our guys, and they swore they were looking people in the eye like 50% of the time. Guess how much we saw they were looking people in the eye? Like 10% of the time. Make this a priority. Look people in the eye. Don't stare into their eyes, but look them in the eye when you're talking to them. Make sense? So write these things down, have them in front of your desk, review them every day, and use them. Does that make sense? Super. Well, I would prefer to just give you the rest of the hour here so you can take some of it to go ahead and put this on paper and put it someplace you're going to look at on a regular basis. So you guys, thanks for being on today. Have a great rest of the week, and we will talk to you all next Monday. Thanks, everybody.